Welcome everyone to Vested Interest. This is Shane, and before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who subscribe to the channel. I really do appreciate it. The channel continues to grow because of people like you, so if you are a dividend investor, that's what we focus here on this channel. Dividend growth stocks in companies with growing free cash flow that covers the dividend, a high return on their invested capital. A lot of them are companies you may know. I cover portfolio updates like this every week, every Sunday morning. I also do a video series called the Stock Pick of the Day series, Monday through Thursday, where I look at a stock individually on a day, high level review of the company and some of the metrics around it to see if it is coming into fair value or currently in fair value, give you my opinion on whether I would be buying it or selling it if I was looking to add a new position, or maybe one already in my portfolio that I am adding. If you are interested in that kind of content, go ahead and join me. Hit that subscribe button down below. Join me on this journey to financial freedom. I also have a Webull link down below for those of you who do not have a brokerage account and want to start one. If you use that Webull link, you'll get some free stocks. I'll get some free stocks as a way to help out the channel. But like I said, hitting that thumbs up or like button down below, subscribing to the channel, dropping a comment, let me know what you think of the videos helps out tremendously as well. So this is the portfolio update for the week. All the activity in the portfolio, dividends paid out. I did add $2,836 of the portfolio. Very red all around. A lot of people freaking out about the market. The company there, the bank out there in Silicon Valley that went bankrupt, belly up, right, for investing in crypto, and a lot of the startups out there that they don't produce any products. They're just startups. Everyone, their grandma wants to start a crypto and get people scammed on their crypto coins. So I don't really invest in crypto crap. Maybe you are. I would not suggest it. A lot of the stuff out there, in my opinion, is just fake, has no utility, and I believe Buffett and Munger are correct. Don't understand it, and not that they don't understand it. There is no value, right? What is the product? Give me a tangible product that I can touch and feel, like a Procter and Gamble, who makes a lot of the stuff that we use in our everyday lives, right? But let's not get too far off into the weeds. Let's jump into the portfolio update. $2,836 in new capital added to the portfolio. Whenever I see red, just like my shirt, I like to buy. I actually like the red. It means that I'm going to increase my dividend yield, I'm going to decrease my cost basis, and I'm going to increase my future returns. So I don't mind seeing red. It is just like going into a store, in my opinion. Whenever you see a sale, that's whenever you want to buy, whenever things are cheaper, not whenever they're going up and more expensive. So let's jump in and see if there were any dividends paid out. That's where we'll start with the video. And dividends paid out on March 7th from Johnson & Johnson, ticker J&J. They did pay out $65.55. And I do have the drip set on. For those of you who are investors, you know what that is. But for those of you who do not, dividend reinvestment plan, that's what drip stands for. It basically means every time a company within the portfolio pays out a dividend, as in the case here with Johnson & Johnson, it automatically goes back in and buys more shares of that company. So Johnson & Johnson paid out $65.55, automatically went back in and bought 0.42643 shares of Johnson & Johnson at $153.71. And you don't have a choice. It just whatever the market is, whenever they pay out, that's what you're going to buy at. I know that Johnson & Johnson is actually a little lower than this right now, and I did add some to Johnson & Johnson as well at a lower price. You'll see that here in a minute. Another thing I like to show here, these 0.42643 shares here added another $1.92 in passive income. I know that's not a ton, but over time that will build on the what they call the dividend snowball effect, right? So every little bit will build that snowball faster and faster over time. So that was the dividends paid out for March 7th. Now we will jump into the first new capital added. Same on March 7th. I went to work and added some. The market started to turn red on I think that was Tuesday, and I started to add on Tuesday. And I added pretty much every day of the week from Tuesday to Friday. So we added, with this $464.69 in new capital, we added 5 shares of Medical Properties Trust, ticker MPW. And this is another one where it continued to drop and I continued to buy. You'll see that. I think it's down in the under $9 range, and I was buying it in the low 10 range here. So another one that I will continue to buy as it falls. And that's my plan with all of the positions within the portfolio, and even some that I am watching. Whenever they fall down into fair value or my estimation of fair value, I will add them to the portfolio and keep adding them, even if they remain in the red and keep falling down, right? Decrease that cost value, increase the yield, increase those future potential returns. But back to the video. 5 shares of Medical Properties Trust, ticker MPW, at $10.15. I like them at anything under $12 per share, so obviously they were on sale in my opinion. And MPW is a REIT out of the real estate sector. I added 1 share of Siboney-Stillwater, ticker SBSW. I would like to build this one out significantly. I feel like they are really undervalued, under $9 per share currently. I believe they're still under $9. So I added 1 share here at SBSW, and I believe I just had a little bit of extra funds left over from this purchase. This is out of the material sector. This is a mining company, an African mining company out of the material sector here. We bought that 1 share at $7.88. We added 3 shares of Whirlpool, ticker WHR, another one that I bought at $135.36. I think it's down in 131 range, so another one I'd like to continue to build out this position, decrease that cost basis, increase the yield, and increase my future returns. Ticker WHR is out of the consumer discretionary sectors. And this $464.69, picking up these new shares, added $27.22 in passive income over the next year as well. Next up, on March 8th, again, we bought every day. We added, this was our biggest tranche really, and I wasn't planning on adding much after this, but it continued to pull back, so I pulled some funds that I had been setting on the side here and continued to add after this, but $1,548.54. And with those funds, on March 8th, we added 8 more shares of Siboney-Stillwater, ticker SBSW, at $8.05. This is that same one we saw before. Out of the material sector, it's a mining company. 15 more shares of Medical Properties Trust, ticker MPW, at $10.10. Again, that same REIT that we saw on the previous page. 6 shares of Bank of America, ticker BAC, out of the financial sector. We added those 6 shares at $32.52. I believe this is all the way down in the 30 range. We did add some more here, you'll see in a minute. On another day, Procter & Gamble, ticker PG. We added 4 shares at $137.34. Procter & Gamble is out of the consumer staple sector. And you'll probably, again, if you crest a lot of products in your household pantry, that you would probably use from Procter & Gamble. Verizon Communications, ticker VZ, out of the communication sector. We added those shares at $37.56. I think this one pulled back, continued to pull back as well. It's down in the 36 range. I like this under 40. Leggett & Platt, ticker LEG, out of the consumer discretionary sector. We added 4 shares at $33.10. Johnson & Johnson, that paid out the dividend before. We did add more to this at $152.83. This is out of the healthcare sector. And all told, $1,548.54, and all the shares that they picked up in the different companies added an additional $67.17 in passive income over the next year. So we weren't done. We went back and we added more on March 9th, another $395.19. And we added 9 more shares to Siboney-Stillwater, ticker SBSW, at $8.11. The same materials company that we saw previously. We added 2 more shares of Verizon Communications, ticker VZ, out of the communications sector. Again, I saw it dropping down in that $36 range, wanted to add a little bit more. So we added that $36.75. And more Medical Properties Trust, that same REIT, ticker MPW, dropped under 10. So we got it for $9.57, adding 26 more shares. And this $395.19 added $39.16 more in passive income. And we still weren't done. We went back and added more on March 10th. Again, I don't mind, just like my shirt, I don't mind the red. You know, as the market pulled back, I continued to add. So what am I going to do if the market pulls back more? I'm going to buy more. And I'm going to buy even more if they pull back more. And then I'm going to buy more if they pull back more. And then as they come back up, I'll buy up until what I feel is fair value, and then I won't buy into those companies anymore. So don't be afraid of the red. Like I said, it is walking into a store. You are seeing something that you are going to buy anyway and is on sale. That doesn't mean you turn around and walk out of the store. Well, it's on sale. Maybe I don't really want that. Now that it's cheaper, I'm not going to buy it, right? That's kind of some people's mentality in the market. Don't be those people. Be the people who look at the red as a buying opportunity. It actually is, like I said, decreasing your yield. It is decreasing your cost basis, it is increasing your potential return, and it is actually decreasing your risk, right? The cheaper you can buy something, the less risky it is, right? Because you have less money into it, and it is increasing the amount you can buy for the same amount. So if I buy at $36 and add $100, I'm adding more if I can get it at $34, right? That's the idea. But we did add $446.46 more to the portfolio, 10 shares of Siboney-Stillwater. Obviously, I wanted to focus on a few different positions this week. These were the three specifically, along with the others we saw in the other page. But we added 10 more shares of Siboney-Stillwater, ticker SBSW, at $8.50. This one was actually coming up, right? So this one was actually one of the few that was rising on the week, but I like it under 9. So it was still under 9, so we added 10 more shares here. And it still decreases my cost basis. I believe my cost basis in this is around $10.50. We'll see that here in a minute. But ticker MPW, that same REIT, still down in the $9 range. It even dropped further. We bought it at 10.15. We bought it at 10.10. We bought it at 9.50 something. And we bought it at 9.14. And next week, if it's still down in the 8s, we might put a big tranche and buy 100 shares down in the $8 range. But we added 6 more shares of Medical Properties Trust, ticker MPW. This is the same REIT. And 10 more shares of Bank of America, ticker BAC, at $30.67. Financial sector really took a big hit because of what happened with that bank out in Silicon Valley. Silicon Valley Bank, I believe, is what the name of it was. So that is going to impact a lot of the other banking sectors. Now, Bank of America is no worse company today than it was, at $36, $37, $38. So I'm going to take this short-term impact here, use it to bring my cost basis down on Bank of America. Really like this company, would like to build this out to where it's paying me about 300 shares in dividends. All told, this $446.46 added another $19.96 in passive income. Keep on increasing that snowball. And total invested $2,836.88, and the total invested, along with the dividends paid out from J&J, added $153.51 in passive income over the next year. So very nice to see the passive income increase. This is one of the larger increases, but it's also one of the larger times we've invested in a single week as well. So, and to be honest with you, I will probably be around $2,000 over the next several weeks if the market continues in the red. So I like to add a little bit more. Usually I add about anywhere from $1,300 to $1,400 a week. I'll probably increase that a little bit to around $2,000 a week over the next several weeks if the market continues to pull back. And then I'll back off to my typical $1,300 to $1,400 a week investments. Now here's where we get into the overall portfolio update. This is the sector weights breakdown. So I have in the communication sectors 9.56%, consumer discretionary sitting at 9.06% of the portfolio, consumer staples is sitting at 6.44%, energy sitting at 8.41%, financials sitting at 13.07%, healthcare sitting at 9.26%, industrial sitting at 7.41%, technology is sitting at 9.86%, materials at 12.73%. No utilities, still watching a couple utilities, waiting for some good pullbacks in that sector. REITs and real estate sitting at 14.19, obviously with a lot of the ads with MPW, that's raised this position up to now be the largest position in the portfolio. This does change over time. It was financials for a while. Now it's in the REITs because, like I said, I've been adding there significantly. And no ETFs. I consider the overall portfolio its own ETF. I am building my own ETF. I'm not paying any fees to build this out. I'm managing it myself. That is the whole idea behind the name of my channel, Vested Interest. I am taking a vested interest in my investment strategy and doing it all myself, so I don't have to pay anyone any fees to do that. Here are the sector weights broken down by how much is in each sector, right? How much is at $11,000 in communications. You can pause this and go through this and the sector weights. So now, in full transparency, I like to show you every week exactly what's going on with the portfolio. So you can pause this and go through every one of these sectors, the ticker, right? Which company their ticker is, total shares I own, the current price as of the close of business on Friday, my current market value, just total shares times current price. My average share price is the total shares times my purchase price. Here's my purchase price, right? How much I have into each position, whether I'm up or down, how much I'm up or down. And obviously you can see a lot of red. So I'm going to show you if I'm up. I'm going to show you if I'm down. I don't care if I'm up or down. I'm looking at the passive income here provided by the portfolio, whether the market's up, whether the market's down. This is what I'm really interested in. It's currently sitting at $6,251.86. So it is increased significantly over this last week because of the amount I added to the portfolio. But percent down, so I am down overall 6.23%. The sectors, different sectors in the portfolio, which one each company sits in, whether it's paid out quarterly, monthly, or semi-annually for the dividends, and how much they're paid out, at least currently. I usually update this whenever I see an update, or quarterly at the least. The current dividend yield, right now, the current dividend yield is sitting at 5.421% of the overall portfolio, which is higher than my yield on cost, right? So as these companies pay out, if they continue to pull back, it will help raise my yield on cost. Portfolio weighting, we saw on the previous slide, the sector weightings. This is the weight of each position. Estimated annual income, here's the months that they pay out. I don't think you can see Ally pays out in January and March. Bank of America starts paying out in March. And the percentage raises or dividend raises, at least the recent ones here, which currently my overall is sitting at 9.04%. So total is sitting at 115,000. The total position, my portfolio position, is sitting at $115,336.29. I have $123,004.97 invested, right? So that's my money out of pocket in the account. I am down $7,688.68. And my percent return, like I said, is down 6.23%. Current dividend yield 5.421%, yield on cost 5.083. And as I stated, this is what it's really all about. The portfolio, passive income provided by the portfolio and all the positions within the portfolio, sitting at $6,251.86. Now this one I threw in. I don't typically cover stuff like this on the portfolio update, but I thought it was important because we are obviously seeing a significant pullback. And again, I believe we're in what we would call and what you're seeing here is, right, so you've got the market, right, late, and then whether you're in a recession, full recession, early recovery, full recovery, where you're at economically as far as overall conditions. So the market usually trails our economy, right? But it also is telling you when you're at the market bottom, you might want to be looking at buying finance, technology, and cyclicals, right? And then as you come out, those are going to do well because you bought them at the bottom, right? Usually technology, you can still, as you start into a bear market, you can still be buying it, and it is one of the things that really runs up, right? We saw technology really shoot up over about a 10-year period, right? So if you bought it down here, you did very well over that period, right? Industrials, basic materials also. At the top, you might want to be looking at a market top, which I think we're already past the market top. You might want to shift gears. This is also whenever you hear people talk about the rotation in the sectors or the rotation in the market, this is kind of how you're seeing it. So you would go from at the bottom of the market or in a full recession, you're buying finance, technology, cyclicals, and kind of running those up. In a bull market, you still might be buying technology, industrials, and switch over to basic materials. When you get to the top, okay, I'm going to stop buying technology because we're at the top. I'm going to start buying basic materials, energy, and staples because those are going to do good as we run down, right? As you enter into a bear market, which we are obviously in, energy, staples, healthcare typically does well. And then as you enter late bear market, we are not in a late bear market. We are just entering a bear market. We are in early recession, right? We're over here in the early recession coming down. So you might want to be looking at energy, staples, and healthcare to be buying. And then as you enter a late bear market, right, that's why I'm not buying any utilities right now. Once we get into a late bear market, I will start looking at utilities, healthcare. I am buying finance because I don't mind buying that as we come down, and then I'll stop buying it as we come back up. So this is where I would be looking for deals right now. Energy, staples, healthcare, utilities, finance. Maybe a little, if I'm seeing a pullback, I did buy a lot of basic materials this with SBSW, right? So maybe whenever you see a sector that pulls back, SBSW is having trouble right now because they're having strikes over there. That's why they're pulling back. So they have a macroeconomic condition that's impacting them specifically. Valet, if you saw Valet on the previous page or go back to the previous page, Valet is one of my highest positions. It's up like 16, 17%. Everything else is down. Valet is down. So a lot of other things in basic materials are actually up right now, or Valet is specifically. But this, again, stop and kind of look at this, and you can kind of see where we're at. Again, where do you think we're at? Don't listen to me. Make your own decisions. Make up your own mind. But I will tell you my opinion. We are in early recession, right? So we are on the downtrend, right? And if you want to match that up here with the market, we are in the start of a bear market. Have been for about a year now, right? We're not in a late bear market yet. We have not bottomed yet, in my opinion. So I would be, again, looking at what energy, staples, healthcare, utilities, finance. From here to here, look for the deals here. And then as we start coming out of the bear market, right? Market bottom and early recovery, you want to start looking back here. Finance, technology, cyclicals, technology, industrial, basic materials, energy, staples. Right? Okay, I'm going to leave you with that. Hopefully you found value in the content. If you did, go ahead and hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join me on this journey to financial freedom. Hopefully you're on your own journey as well. Like I said, I do have a Webull link down below. If you use that link, deposit some money in it. It is a way to help me out. I will get some free stocks. You will get some free stocks. Don't have to use it, perfectly up to you. I also have a Ally Financial is where I do most of my trading out of. There's a lot of other trading. I would just say if you are paying to trade, find another brokerage account. You should not be paying to make trades in this day and age with all the options out there. Well, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up. Ring the notification bell. Most importantly, subscribe to the channel. Hit that subscribe button down below. It does help me out. It does help with the YouTube algorithm. You can also drop a comment down in the comment section. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, suggestions for future topics. So if you have some stocks you wanted me to check out on my Stock Pick of the Day series, for example, go ahead and put those down below as well. I'll try to work them in. Or constructive criticism, or if there's things you don't like, other things you want me to change or swap up, I'll take them into consideration with a great big old grain of salt. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those that take a vested interest. Hey, one last thing. The red does not mean run. This is a buying opportunity. This is where the millions are made. This is where wealthy people go in, find assets at the cheapest prices, and buy. Buy, aggressively buy if you can afford it. Don't put yourself in financial hardship, but don't run away from the market because it's red. That's a mistake, right? Just like you don't run out of a store whenever they throw a sale on. You go in there and you buy more. The stock market is a market, just like the grocery store, just like a market where you go buy shoes, right? Stocks are on sale. It's the time to buy. All right, I'm gonna get off my soapbox. Hope you guys have a great weekend. We'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and an investing journey for educational and entertainment purposes. Investing involves risk and handles money. To never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and selected criteria, or seek the advice and counsel of a certified financial advisor.